Hello traders, Cousin Vinny coming to you from closingprint.com on February the 9th, Sunday, with a look at the week ahead and a watch list. Currently, indicators that are bullish. The VIX saw a spike to 21 and move lower. We also have macro, which is showing some bullish signs. The indicators that are bearish, trend obviously, we broke down below the 50 moving average on most of the indices. Breadth has continued to see intense selling, except for the last 3 days, Wednesday, Thursday, Friday. Sentiment is in the yellow zone as well. And zooming out to a monthly view of the spiders, we need to point out the overbought nature of RSI, which Arthur Hill pointed out over at stockcharts.com this weekend. We are currently in month 59 of the current secular bull market off the March 2000 lows. So I'm looking at a number of scenarios here. The first scenario, personally, I don't feel the fear that you'd expect to see with the loss of the 50 period moving average on the indices last week. The put-call ratio certainly does not reflect fear. Although VIX did spike into fade territory, the intensity of the selling from January high to recent low in those 9 days certainly saw the advanced decline spike lower. Looking at the S&P 1500 composite and taking a 9-day average, which is the January high down to this February low, and looking at the commensurate advanced declining stocks, we can see that we got down to lows that we haven't seen since May of 2012, and it is of a concern in terms of the intensity of advancing stocks versus declining stocks over that 9-day period. The upper chart favors small and mid-cap stocks as there's more of them, and the lower one is based on volume and favors the large cap stocks of the S&P 500. In addition, of the past 3 secular bull markets since the 1990s, the average duration was 61.33 months. As we can see, we had 64 months here, 61, and we're currently in 59th month as of the January top if we were to turn over. So my first scenario looks at the possibility of a dip here continuing after a move higher and a retest of the 50 period moving average. We'll look at that chart in a second. And then a double dip before a bounce, get the CPC up into the 1.2 range, along with VIX again getting overheated, and a number of other indicators to support a bounce into the April-May tax season. So that's basically scenario number 1. In scenario number 2, we could continue the current move the past 3 days, take out the January high, and move higher above that level for the next 2 to 3 months. That would equal months 60, 61, and 62, or exceed the average of the past 2 secular bull markets and max out around 64 months, again around tax season. Now, in that scenario, in order for that to happen, TLT would need to continue to move lower. Notice the large curvy bars here that offer support in a move lower. That should be a bounce area, which we're starting to see right around the 20 period moving average. In order for scenario 2 to continue, where we just completely negate this pullback and move higher into April, May, and complete a 64-month secular bull market, bonds would need to roll over and push back through that curvy. So we saw a bounce there on Thursday and Friday. We'd need to see the 10-year yield reverse hard. Let's take a look at that. And as I mentioned, looking at the 10-year yield, we can see where we've found support in this area here around the 382 from the lows at 1614 up to the recent highs. We bounced at the 382 level, which I would expect, but I'm looking at this as a bounce up to the 382 level with the 10 period and the 30 period turned lower, or the 2050 if you use those. This is an area to short in here. That's what I'm expecting to happen. So in order for scenario 2 to work out, this has to blow right through here, the 10-year yield, and continue to move back up here to those recent highs that we saw back in late December, right back up to the December highs that we saw here at 3.36%. I don't think that's going to happen. With a continued move in the 10-year yield higher, that would mean that builders would roll over both of these charts here, XXB and ITB, as well as REITs would need to roll over as well. We are flattening out a little bit here, which you would expect on that bounce on the REIT on the 10-year yield, and we'd have to see utilities completely reverse and move back down to this lower trend line. All that's possible, but I just don't see this scenario develop. Considering the Fed, this is a chart of the reported and the implied unemployment rate, and the differences between the two. The red line is the actual implied unemployment rate, and this black line here is the drop below 6.5% level, or 6.6% level, that the Fed has been using for targets for continued tapering. So with this chart, I don't see the Fed starting up the printing presses again. So that also supports scenario number 2 not working. And unless we not forget this move lower to confuse things even more, the number of workers that are no longer counted on the unemployment records because they've dropped off of benefits because they've exceeded the amount of time. It does support the thesis, though, that the Fed and the President want to see this number move lower so that we can see further Fed tapering. Now, if you look at the Reagan years and also the Clinton years, you can see that both the implied and the reported both moved in unison. And that's because we were actually seeing more jobs created, and we saw a positive net result on the labor force and a commensurate move in the GDP and growth and jobs for the United States. So we currently don't see that right now, but the Fed would like us to believe it. Now, there is a third scenario which you can go check out if you want to look at Yukarowitz's site here at fatpitchblogspot.com. And if you look down here at the third one, you can see what his 3 scenarios are. This is a very good article. You can just click on that link. Actually, I'll put the link in the notes at the bottom here, the comments section, so that you can link right to that. Very interesting post this weekend by Yukarowitz. This is a chart of the NASDAQ composite, and we can see that we've already closed above the 50 period. Now that I've enabled it, this solid white line here, we bounced off of this lower trend line, and with respect to the indicators, we have a number of them confirming the bounce. Now, the scenario that I'm looking at is that the 10-period EMA, which is rolling over, and the 20-period, which crossed through the 50, will continue its downward move. We'll see a little spike up here and a move back down lower, as in scenario number 1. Looking at the indicators, again, we can see MACD is turning. The bullish percent got down into buy territory, as did the NASDAQ summation index, as well as the NASI looks like it's turning, and the MACD. The number of stocks trading below their 50-period moving average are at 46.18. And we can see percent B has moved out of a buy territory area off that lower Bollinger Band. If you enable that, I believe we punched outside of the lower Bollinger Band, which is a buy signal to some. And here we see the lower Bollinger Bands. You can see where we punched outside of both. We hammered on Wednesday. That was a good signal. And we can see that the Bollinger Bands are starting to compress, move back in the opposite direction, which leads me to believe that we'll come back, we'll compress, we may bang around in here a little bit around the 20 period and 10 period EMA, and then drop lower again to a lower level of support. before we actually see a run into April, May into tax season of 2014. Shifting our focus to the Russell 2000, we can see relative weakness in that index. We can see how we broke down through this support level, a previous resistance level, flagged out here for 4 to 5 days, broke down, and now we're retesting that level as well as the 10-period EMA. Looking at the Russell strength to the S&P 500, we can see in this chart here that we've been moving sideways. MACD is turning. Stochastics did get oversold. So currently what I'm looking at is an oversold bounce in the Russell. That's all I'm seeing here. RSI I would expect to get up a little bit higher and then fail again. So that's what I'm looking for going into the week on the small caps. Looking at the 9 spider sectors, we can see all of them lost the 20 and 50 period moving averages except for utilities and healthcare. I would submit to you that interest in these sectors is commonly thought of as a defensive posture in the market, so watch XLU and XLV for a continuation move higher off of the 20 and 50 period moving averages. The other 7 sectors are witnessing a 20-50 moving average bear cross, and in order for scenario 2 to work, these sectors would need to reverse hard and continue to move higher out of these bases, overtake the 20 period and 50 period moving averages that are currently just overpriced. Just looking at the XLK technology sector spider, looking at the fact that the comp has retested its 50 period moving average, we can see that we've exceeded the 50 period EMA and are currently right at the 20 period moving average here on a Bollinger Bands. RSI is moving higher, so the possibility of this retaking the 20 period is not that remote. It could happen this week with a cross on the MACD and stochastics continue to move higher. But again, I'm still looking to a move lower in the very near future and a resumption of the trend lower. This is a chart of the utility sector, XLU, which has been performing very well since this low in December. We see a triple top here, and more than likely we're going to take this level out this week if scenario 1 starts to work and prices resume their move lower on the SP 500 and the comp, and the Russell continues to fail. Now that's the bearish case, of course. The bullish case would be that this rolls over and the S&P 500 continues to rally as well as the comp, and the Russell completely takes out that bear flag and moves higher. Looking at a chart of the XII ARC Institutional Index, the 75 stocks most widely held by institutions as their core investments, we can see that we bounced off of this near this lower trend line, the previous support level, resistance, and we're cruising back up to the 20 period here, which is coincidental with the 50 period, or excuse me, the 50 Fibonacci level on these 2 pivots here in that move lower. RSI is pointing higher, and we can see slow stow is already starting to get back towards the 80 range. MACD is going to cross, and %B looks good, and CCI gave a buy signal as well. So I'd expect to see this continue to move higher for the next couple of days on this oversold bounce here as well, and see a failure somewhere in this range, either at the 618 and the 20, the 50 is right in this area here. I don't have it enabled, but you get the general idea. TLT, we talked about the bounce here, possibility. Note CCI is flattening and may turn back up, which means that CCI could see a bounce off the 20 period here and get back into the Kirby very quickly. With a move lower on the 10-year yield, we could expect to see this cup and handle play out on the builders. This is a chart of ITB, the Dow Jones US Home Construction Index, building a nice pennant here and continue to move higher, testing these recent highs back in 2013. of May. This is a chart of the carry trade DBV. Note that we're in this little channel and we're quickly approaching this resistance level. If we break out here, that would be bullish for stocks. If we fail and move back lower, that would be bearish for stocks. The IEF 7 to 10 year bond looks very similar. It's got this huge Kirby bar here that it's sitting on top of. I would expect to see a bounce this week. So that's the opposite of the 10-year yield, obviously, the 10-year, 7-year bond price. So with the 10-year yield moving lower, I would expect the REITs, the RWR, Jones-Wilshire REIT Fund Index, to break above this level here and continue higher. We currently have a position in Annaly Capital. We can see MACD is pointing higher, and Bollinger Bands look like they want to continue to move higher as well, and could break out and expand here. So I'd look for that going into the next few weeks on the REITs that we're trading, as well as this index, this fund rather, and trade accordingly. Looking at the XLU sector for some of our setups here. This is the XLU sector, and the components, we can rank these by the percent change. You can see the stocks that are doing well. Many of these are on my watch list. Dominion, PNW, PCG, PEG, SRE, NU, NEE, AEP, NI, AEE, and a number of these other ones. So you might want to check these out. You can pause this and check these charts out. But let's take a look at a few for the time being. This is AEP. You can see that we broke above this level here, a trend break, a retest, and a move higher. Similar here, we broke above this level of resistance and this Kirby. We're continuing to move higher. Dominion Resources above the Kirby. We're retesting this triple top area. We should see a break higher going into the week. MACD starting to turn. Stochastics is oversold and turning. CCI and percent B both support a move higher. PNW, drawing a trend line across here, I can see a test of that level. Note the Kirby levels here that should offer some resistance, but we're inside of one right now, so there's a possibility we could run back up to this 54.30 level before seeing some resistance on PNW. PEG looks good as well. We're already breaking above a level of resistance, and this Kirby, we should see a continuation back up to these recent highs at 35.25 as a first target. CMS also looks good here on a continuation move, a break of this trend line, and a move higher. MACD is continuing to move higher as well. Looking at other watch list stocks that are unrelated to XLU or REITs, you can see Qihu continues to bang around this sideways range, came back down and tested this breakout level. WX looking good, moving higher. GoGo looking good. EPAM, one we still have breakout on Friday. Electronic Arts testing those recent highs, and we could see a handle built here. The airlines that we talked about, American Airlines, which we talked about a few weeks ago, continue to move higher along the 10 period under the radar. Nobody's watching this, as well as Delta, which Mikey is also watching, and Ryanair. All these stocks look really good. Stocks that Mikey is also watching. Data on a pullback. We could see a move higher on this one. We really love a test of the 10 period EMA after that stellar earnings beat. ACT looking good. A little pennant there. Finisar, double bottom. ESRX. Another one that Mikey's looking at. Looking good for a retest of that 75.48 level. EIX could retest that triple top along here. STR, break above that level here, trend line. VRX Mikey's looking at. That's a nice pattern here to break above this Kirby level. And pennant. KS has got this nice little range here. And CSOD. Okay, so that'll do it for the week. This is Cousin Vinny coming to you from theclosingprint.com with a look at the week ahead and a current watch list for the week of February the 9th. I hope this helps, and come and check us out at Day Trader Bootcamp for a $19.99 2-week trial. See if you like what some of the traders are doing in the room, and we'll see you in the room on Monday. Take care.